Let's welcome on board Nitin Raheja, Executive Director, Head of Discretionary Equities at Julius Baer's Wealth Advisors. Hi Nitin, great to be speaking with you and thank you so much for your time. So Nitin, Indian markets are holding up very well because from the March and April lows, we are already gained almost 13% on the index front. So Nitin, the big question is, are Indian markets back in form or are they back in froth given the run-up that we have seen in the mid and small end of the market as well?
I mean, clearly, it's been an absolute unprecedented rally, which actually started post the announcement of the ceasefire. I think this also got to do with the fact that relative, the dollar has been in a sort of a structurally weak phase, which has seen the rupee being stronger relative to the dollar, and that has meant that foreigners have actually bought in money. I think that's one big change and differentiating thing that we've seen in the last month, more so post the ceasefire. I think that's what's driven up the markets. It's been a hugely liquidity-driven rally. Having said that, I think some of the concerns that resulted in the correction that we saw post-October, I think had to do with earnings and the slowing down of earnings, and also a tempering of GDP growth expectations. I think they remain very much in place. What we saw post-September was when there was a disappointment as far as earnings concerned. I think analysts, went the other side in terms of their expectations. And as December and March numbers came, they were not as bad as expectations. So we've once again seen a little bit of re-rating. So I continue to believe that in the short term, I think valuations and slowing GDP growth will act as an overhang in the short term. And we are in a time correction zone, wherein you will see the markets trade within a range as such, maybe towards the upper end of the range, considering the liquidity flows. But over a longer period of time, post the kind of monsoons that is being expected and was being talked about earlier in the program, also with the festival season, we should see markets trend and maybe hit new highs towards the second half of the year.
That's right. Hi, Nitin. This is Kanishka also joining in. Like you were just mentioning that monsoon has arrived earlier this year and there's going to be an impact of that. So could you help us understand where do you see the sectoral impact, especially in the FMCG, agri inputs and rural focused stocks, if you could give us more views there?
I think clearly rural is one of the key beneficiaries. Already the feedback that is coming about is from a perspective, of course, there has been this whole hike in MSP over the last few years, plus with the monsoons being good, even last year and this year, you should see rural start to come back dramatically. And that would have an impact as far as FMCG and even some of the consumer durable plays as such. But against that, we would also see two other things that have taken place. One is the changes that we had as far as tax is concerned, especially for the lower middle class, wherein the up to 12 lakhs, you will land up saving on tax and so on and so forth. A fall in inflation, which has impacted the purchasing power of the middle class, as well as falling interest rates. That should also see a revival in the bottom K of consumption, I believe, towards the second half of this year. So I think combined with the rural as well as the urban consumption, the bottom K has been the struggling part of the economy post-COVID and so on and so forth. But I think that coming back should have a big impact.
All right, but Nitin, I remember the last time we connected, you used to like some of the themes within the broader market, like garments, auto ancillary, and even EMS as a play. Give us the latest on these themes. Do you continue to be bullish, and any new additions in your latest theme or sector-wise view, if you want to share with us, which is looking interesting to you right now?
Well, I think if you look at broadly from a long-term structural growth plays perspective, we continue to like the consumption theme, which is the premiumization of consumption. I think as we are moving our per capita GDP from $2,500 to say, in the next 2 years, given these growth rates cross $3,000, you are going to see consumption go up, and premiumization of consumption, which is already visible, whether you see premium automobiles, premium apparels, premium real estate, travel, and so on and so forth. I think that will continue. And because the theme is resilient to relatively to inflation and interest rates. But I think the broader consumption story is a compounding story that should come back and that should do well over the next few years. We continue like that. We think the manufacturing theme in India is going to play itself out, and EMS continues to. We are seeing investments in that area, and that should continue to deliver. These are multi-year themes, and will probably deliver returns over periods of time.
That's right. So you see the consumption story coming back very soon. But apart from that, I want to get your view, especially on the earnings front, like you were just mentioning in the beginning. The last time we spoke, you had said earnings slowdown will take a couple of quarters to improve. Now, Q4 earnings are almost over. What are your thoughts there, and which particular sectors do you feel where that improvement has already started on a steady note?
It's if you look at the earnings that have come out, there is no clear sector trend that we have seen. We've basically seen within sectors, some businesses, depending on the business models, do better. But across sectors, we really haven't seen a structural earnings growth. Like I said, premiumization of consumption has shown itself. You are seeing the hotel industry deliver good numbers. You have seen airlines deliver good numbers. So travel has been one secular theme that we have seen among all of this lot. But if you were to scan through beyond premiumization, it's actually been very, very stock specific. Even say if you take banking and financial services, we've seen that as far as the larger banks are concerned, do far better than the smaller banks and the regional banks. We've seen NBFCs do better. And within NBFCs, we've seen a certain pact, especially the larger NBFCs do better than a lot of the because the ability to raise capital in a tight in the scenario that prevailed over the 6 months gave the large guys an advantage. Now that liquidity is surplus, you should see the small banks and the smaller NBFCs also start to come back.
All right, so that's the take on the NBFC basket. But Nitin, with your market outlook that maybe in the second half, the markets are expected to do a lot better than the first half, give us some sense that what factors will the market look forward to? Is it just the better earnings outlook, or rather what's really been happening in the global macro setup? That voice is also expected to stabilize a bit. What cues that the markets will be looking forward to in the second half, and which sectors can participate the most? You did share your take on the manufacturing as well as the banking space, but other than that, any other heavyweights that you believe will participate the most?
So, when you look at India as a market, right, 57% of our GDP comprises domestic consumption. So consumption doing well is a very, very important and essential part. And that is supplemented by, capital expenditure or infrastructure spending. So if you look at these two buckets from an economy perspective, I think if consumption comes back, we should see the economic growth being very strong and resilient. That being in place, we should start seeing corporate earnings starting to show up out there. So in my own view, I think the fact that inflation has turned benign, which has enabled interest rate cuts, which has enabled the central bank to flood the market with liquidity, is all laying the grounds for the economy to come back. Now, in light of this, the reason I say consumption first is because that is something which is more domestic oriented. When we look at manufacturing or we look at infrastructure and capex plays, that is being led by, to some extent, global uncertainty, and that could have some impact in terms of what allocations are done. We haven't really seen private capex come back in a big way. Again, even the capex plays that we have seen come back are more in the nature of power, which is internal. So whether it's transmission lines, whether it's renewable energy, that is again internal. So I think what is happening in India is largely going to determine India growth going ahead. So in that sense, we are relatively insulated from global place. And with a more clarity on tariffs coming about, hopefully in the next few months, we should also see more clarity in terms of global place come in. So my own belief is a good monsoon, a good festival season, driven by consumption, all should be the drivers for growth in place.
That's right, Nitin. You just mentioned all the points I was going to ask you next. But still, I want to get your specific view on the auto space. And within that segment, the two-wheelers and tractor space. Like you just said, because of the monsoon, early onset of the monsoon, we could have demand recovery coming in. Anyway, you are bullish on the consumption story. So what is your outlook on this space, especially, given the kind of numbers we have seen in Q4 and sales numbers that have sort of remained a mixed trend?
Yeah. So I think in the auto space, it's going to be really driven by model accretion into each one's portfolio. And we've seen that. Whenever you've had a new model accretion phase, you've seen companies start to do well as such. I think two-wheelers as a space should come back. And contrary to what a lot of people believe that, it should be the absolute bottom end two-wheelers, given the aspirational element, we are even seeing in the semi-urban areas demand for higher end two-wheelers actually make a comeback. Tractors is a space that should continue to do well. It's had very strong growth over the last 1 year, and I think we are optimistic on that part of the segment market also.
So two-wheelers and tractors as a space are giving confidence. But with this, Nitin, we let you go on that. Thank you so much for taking the time out and speaking with us. Pleasure.
Thank you.
If you like this video, then like, share and subscribe to ET Now.